So basically we are rolling already. Yeah, okay, great. So New York.
Good.
And grew up in Long Island
New York.
City?
That's correct.
In New York. Anything good to say about New York or Jersey? No. We'll just keep that. When people are in there, it's like, what's your favorite pizza? Which is like,
I can't help with that question if anyone has questions.
It's actually in Brooklyn, in my opinion. But yeah.
Of course it is.
Which one is your favorite pizza?
And mine is in Williamsburg, Lindustry.
Okay. And a steakhouse?
That's a harder one. I think the answer is Wolfgang's in the city. There's a couple locations.
No
I like the one on
kidding.
33rd Street.
I was, being a Brooklyn guy, I was expecting you to say, of course,
Luger's.
Peter Luger. Yeah.
It's fun for a group. I don't know. They're actually the same. The one I said was actually a former Peter Luger's, I think, waiter or host or something who left and started a competing chain in Manhattan. So they're fairly similar. The vibe is the same.
Yeah.
Similar.
I don't really know how much I appreciate the different places in terms of the quality of the steak. There is a point that it's like wine. Can I really differentiate between them, or is it just for the sake of being in that place?
I'm not an expert.
Actually one of my favorite places is King's. And you go in, you have all those Polish pipes everywhere. It's more for the ambience, and the steaks are great. But from there to like, oh my God, this is the best steak ever. I don't know. There are other locations that I really like in Turin, Italy, but that's different topic. Yeah.
It's something different.
Yeah.
Cool.
Oh, completely. But fantastic. So what should we talk about? Equal Ventures? The amazing summit that you guys are organizing?
Yeah, look, Equal is an early stage venture fund based here in New York. We're 6 people. We are very much verticalized. So we focus on 4 core areas. We do climate and energy, we do retail, we do supply chain, and we do insurance and benefits. I'm the insurance person here on the team. I joined just over 2 years ago. Like you alluded to, we are hosting a really exciting summit here in New York. A little bit of the background is we're a small firm. We're only 6 people, but we carry our weight, I think, on big events. So Equal hosts an event called the Emerging Manager Circle Summit every autumn, which is a networking community for emerging VC managers who are starting their first fund and institutional LPs. That's turned into a fairly, large community and a big event. So about 2 years ago, we started exploring doing other big, summit events in the city for our respective verticals. And my colleague started this event that we called the Climate Capital Summit in 2023, which was a very big success. So, the goal was, how do we create a new sort of conference-oriented, content-rich event that is, focused on a specific sector, brings in, leading innovators from the growth stage companies, corporate executives, and capital allocators, right? So private investors from, our VC community, from extended private equity communities. And the goal was to make this more intimate than your typical, large summit or conference event, which like obviously all those verticals have, and which we go to and which we enjoy. But we thought there might be demand for something a little bit different, right? Like more curated content, a sort of more intimate group of leaders from the respective space, way fewer people, no booths. So just a really different experience. And my colleagues pulled this off in the climate space for the last 2 years with a lot of success. We've had a bunch of C-suites and CEOs of public companies on the stage. We've had leaders from the private equity and VC world. We've had a really government officials even. We had a cabinet member join for a speaking slot last September. And a lot of interest from the community. So for like a 300 and change person event, we had multiple thousand applications to join, which was really staggering. And I think just speaks to the demand for this like more intimate, verticalized, event where you can have really excellent content, but a lot of networking exposure too. And it's, enough people that you can meet new people, but not too many people that it's overwhelming. It's a 1-day in and out event. So seeing the success from that event, we determined that we should replicate this across our other sectors. And I am leading the charge on the insurance side. So we'll be hosting the Insurance Capital Summit here in New York on May 8th. We have a fantastic venue picked out down in Lower Manhattan that, has great views of the city and I think feels like very New York in a way that we were excited about. And we've got incredible, executive level speakers from, a handful of firms that we're super excited about, including, you can see all the speakers on our website, which is ics.equal.vc. But it's really a collection of leaders from corporate executives and leading startups and capital allocators. So folks from Stone Point, Kinsale, Gallagher Re, I'm just going down the list right now, Newfront, Hub, leading venture firms, Evolution IQ, at Bay, some of our own portfolio companies that we're particularly excited about. So it's just, that's very much not an extensive list. That's not even sort of me eyeballing and scrolling really quick, but a lot of really exciting content and a really great event. So I don't know, it's a pretty long plug for an event, but I would urge people from the insurance industry to check it out. You can go to ics.equal.vc to learn more about the event and see a more extensive list of speakers. And there's a button there that you can apply to get an invite, which we are just now starting to allocate out with registrations. So yeah, would love to see folks join us on May 8th, and I'm super excited about the summit. I don't know, Gilad, what do you think about these kind of events? Like, you like them? You think it's like overdone?
I love them.
What's your perspective?
Well, listen, after you already answered most of my follow-up questions about the event, and we still have a little bit more in terms of why curating content, what type of content fits it, will there be espresso machine? Because as you know, I drink coffee until I drink wine. So there are things that are important.
That's
but
right.
With that, listen, and we talked about it a week or 2 weeks ago. Small events that are organized by VCs at the beginning are very focused. And I love that concept. I think that the guys from MGV have done
they're great.
A remarkable job with their symposium in Cologne or Köln, the way that it should be pronounced. They've done a great job there for the past few years. And it starts very, very, very focused. The challenge is, once you're successful and more people want to get in, how do you keep that focus and serve your LPs, your portfolio companies, which actually their success is the success of your LPs, and then of course all the ecosystem that will make sure that your portfolio companies will be successful. Now, the fact that you're doing it in New York, you find a beautiful venue there in Tribeca, it's a bonus, right? I've been talking with a few folks who are like automatically think about, okay, what are we going to do? In terms of event-wise, are we going to do Vegas? Are we going to do Scottsdale? Oh, it's going to be too cold or too hot? Should we do Florida? Right? Because if it's winter, people think about, we should go to the hot places. And Vegas, needless to say, is perfect for that. Arizona, Florida, and then you have a few. But May? Oh my God!
May in New York is lovely. It will overlap with one of the 2 nice weeks here in the city. That wasn't the draw, of course. We didn't plan it to overlap with the weather. I think, look, we're in New York, and a lot of the guests and speakers are in fact based in New York. Many are traveling. But yes, there is an added benefit that you get May, early May in New York City is usually very nice.
Yeah, May, September, just before you start sweating. And just when you stop sweating before you start freezing.
That's right.
You have
a very narrow window. It gets narrower every year.
Does it? Oh man,
I think so.
Well, listen, I'm spoiled here in California. It's been almost 11 years since I left New York. Although my number is still New York number. It's a little bit. It's in nostalgia. So I can talk about the good old days of crossing mountains of blue and grimy snow just across the
Yeah,
street. And on the other side, it's still New York. So many things to do, especially in the summer. It's
that's
one
right.
of the best places ever in terms of intellect and intrigue and culture that is everywhere and things to do. But, oh yeah, and Shakespeare in the Park, one of my favorites. But going back to your summits, so one day, start in the morning and I assume happy hour?
So 1 day summit lasts all day. We'll start around 10 a.m. And in the early evening when there's lunch. In the early evening when content ends, yes, there's a small happy hour reception that will follow in the early evening. But yes, it's 1 day in and out, super jam packed agenda, and I think it's a really efficient and exciting event.
So
And one thing I
what?
should add that I guess is not typical with some of these events, and maybe it wasn't obvious, is we don't charge for this event. So we'll bring in some sponsors who are really excited to have as partners, and we'll be announcing shortly. But we do. There's no cost to attend, which we think is important. I think it's just like a big distinction from a lot of the other events, and it's showcasing that our goal is really bringing a community together. And to your point, right, you talk about like our role as VCs and like the extent to which we're trying to support our portfolio companies and ultimately LPs. I think like I said, we work in these very distinct verticals that are all huge components of GDP and have trillions of dollars in annual spend or TAM, but are also quite intimate and are known to be very like relationship driven ecosystems. And I think that is really the goal of this event, is to bring people together, allow us to extend our network, allow everyone at the event to extend their network, and have more overlap between the people who are allocating capital and the innovators and corporate execs that are doing exciting things.
Well, to simplify it, it's between, let's call it, to the folks who are a little bit more curious, and then I'll be more than happy to talk about the content, because to select the content, I assume there is only one stage. Need to
Right, that's
be
correct.
interesting enough so people will be tuned in, or I assume there is space also to network while you are losing your concentration and or need to take a few calls.
It's absolutely correct.
But when it comes to, as you said, capital allocators, at the end of the day, most of the deals you don't do by yourself. You want someone who is leading, or you're the leader, someone to join and to co-invest. And then within that decision making of the investment, you want to check why someone else kind of passed or didn't pass, or was a previous or existing investor, and to get that feedback, which is
Of
always
course.
important. And why not say, a part of, at my profession now, I'm a professional wingman in a sense, a professional financial wingman in a sense, which is like, did you meet this company? They are raising Series D. And
Absolutely.
I will leave you to talk about it. Actually, usually I need to do the pitch for them after a proper due diligence and background checks. But we do it also for earlier stages as BA. Really depends if that's a repeating entrepreneur. But that's a different story. That's about me. But back to you. So what's the content? Because as you said, you start at 10, which I appreciate as someone who's going to have a minor jet lag. And with the baby and lack of sleep, even worse. Most likely I would just do a
Yeah.
red eye, because my wife will go like, you're going to a summit, when are you back? So how do you pack? What's the plan for the agenda?
Look, we have throughout the day, we're going to have a jam-packed agenda. We have a series of panels where we,
Mm-hmm.
we'll showcase somewhere between 3 and 5 uh, uh, speakers, on a moderated panel talking about one of a number of topics, and then we have some more intimate, like fireside discussions, which we'll call them, where we similarly talk about a moderated discussion, but it's usually one or maybe two speakers who are either discussing a case study or an implementation, or just talking about strategies that they've implemented at their firms. we're going to cover a range of topics, right? Like insurance is obviously a very broad name for this event. I think like any of the sort of subcategories that we are going to touch on could have and largely do have like their own dedicated, conferences and events dedicated to them. So the goal is, in fact, to have a pretty broad-based discussion, but a couple themes that have come up and things that, that speakers have specifically asked us to be able to showcase with them, or that we just thought were like really important to like have as part of the discussion at the event include, like one theme that keeps coming up is climate risks. It's an area where we're doing a lot of work at Equal, but it's also just like people we talk to from sort of the climate insurance space, but also folks we talk to from just the broader carrier and brokerage space that you don't typically think of as super focused on that problem or associated with that problem. We're eager to have a discussion on panels or keynotes, dedicated to that topic, which, I don't think is surprising to hear given, of course, for you sitting in Los Angeles, but, I think it's become a very important topic across the industry and across the investment community as well. And, as the problem becomes more apparent and intractable.
I just moved closer to the fires, but as we know, ESG is the main. It's a key. Well, it's something that drives a lot of money for several years now. We see it at least 10 years since it's been pushed in Davos and other locations, and the big European reinsurers were, I think, the first ones to pick it up and set it as an incentive that trickled down, cascaded down basically to the carriers and other risks, and they are like all the time looking for different approaches. And then you have the different, I would say, the 1 to 5 billion funds out there. But that's their purpose. They call it impact, they call it ESG, but they're looking for the different projects that can fulfill their allocation and what they're needing, that type of. Then, of course, you have the risk that relates to it, which kind of reconnect us to reinsurers and, of course, Lloyd's that also mark it on one of their flags. But yeah, and which kind of what I wanted to ask, which you already partially answered, is the cross-pollination between the different verticals of Equal. So 100%. You have the climate, you have 100%. I assume
and likewise,
supply chain.
I think a lot at the climate summit. Like I moderated a panel last year about insurance, and we called it like risk management in the context of climate investing. I expect to have a sort of similar but more insurance-oriented discussion at the ICS event in May. And yeah, we're seeing a ton of event both at our event, but also at the climate event that we'll be hosting next September, in September 2025. It's a theme that both sets of investors and operators are eager to talk about. And the way we're framing it internally, this is a little bit different from talking about the summit, but it's a good segue to sort of talk about, our some content that we've put out at Equal, and our thesis in this category is really around, climate risk as sort of its own dedicated investment area where, I think whether, there's a lot of first order impacts to climate change, right? A hurricane or a wildfire runs through, there's damage and there's catastrophic loss. And those are very visible in their first order impacts. But I think there's a lot of secondary and tertiary impacts too, right? To tax bases, to demographics, to asset operators, to the energy industry in particular, to the real estate industry. And I think we are trying to sort of consolidate those different impacts and themes into a single, what I like to think of as more of a single investable category or a single area where we can do research. So we're actually doing a lot of cross-functional work, across our team that is not at all related to this summit. But we certainly want to reflect that in the content we pull together, on May 8th.
And also in terms of the investments, listen, you have 4 verticals that are bind together in the hip, if they want or not.
That's
insurance,
right.
Which is risk, supply chain, you have energy, and climate, which is kind of a bigger envelope that nowadays we see it, with the ESG and everything.
And And you're taking the words out of my mouth, right? I like to think of, insurance and risk management and financial protection as an enabler of all those other categories. It's not just a standalone thing, right? You can't have energy innovation or investment without financial protection. You can't have a stable supply chain, especially in a world that's increasingly volatile, without financial protection. You can't. I mean, there's a million different examples, right? But I think there is a ton of cross-functional work, that we do, and other work, to be done. And we definitely want that reflected in, the content we put out and in the events we organize. So I 100% agree. I think it's like super important, and it's foundational to the way we think about our respective categories. It's also why we have on the team a handful of horizontal investors. Like the way we staff our team here at Equal is we have what we call product owners, of which I'm one, which it means, a verticalized investor, right? So I go around town saying I'm the insurance guy, and most people, that's all they need to hear to know that I'm not, they don't talk to me. Each of our sectors has a dedicated vertical owner, which I think is really conducive to like doing deep research, putting out content, showcasing the work we're doing, supporting our portfolio companies, driving inbound, making it known and driving our brand as active in these respective categories, and doing, as much thought leadership as we can do. But we find it really important to have horizontal experts on the team too, who are, they are very well acquainted and spike across these different categories where we invest, but also pull in other thematic trends that apply across all the categories, or can bring a different lens or different area of expertise that is not, as limited as like looking at insurance companies all day or retail companies all day. So that's kind of foundational to our investing framework here, as like a verticalized expert and someone else who is, acquainted with the vertical, but also
knows the
horizontal generalist. Yeah.
No, I think this is great that, and within 6 people and 4 different verticals, it's great to have that, because I've seen so many people that are specialized or they are generalists. However, when you actually think about what does it mean, as you define the 4 verticals, can you create that matrix and have something who is his responsibility is doing the width, who can actually say, oh, if we cross these 2, we'll find innovation in our edge, right, in the seam and the border of these 2. Or
100%.
One of the things that I loved, especially when I used to have the founder head or head of or doing innovation or that stuff. It's like recognizing technology in one place that will have an application in a different industry.
That's right.
And sometimes, it's never plug and play, right? But it's something that with the small adoption and you use that mindset of the technology.
That's right.
And you have something new that can leapfrog you in a way that earlier it was just a little bit stuck, and it's just there under your nose. Well, you're not exposed to it, so that's why it's not under your nose. But now it is, which is so important to have that, especially when you have 4 sectors who are so tied together and so close to each other. Oh, this is great. Now let's talk a little bit more about Equal. So 6 people, 4 verticals, early stage. So early stage, pre-seed, seed, A, pro rata. What's you are in fund number 10? I don't know.
Not yet. We are currently in fund number 2.
Fund number 2.
It's funny when you ask the stage. I think, we typically enter companies at the seed stage. We've also put out explicit pieces of content titled "We are not a seed fund," and I think the dichotomy there is just to say, we are a highly concentrated fund. We are a fund that likes to be highly thesis driven and make bets where we are the lead investor and where we have a ton of conviction and we're pounding the table for investments. I think that also leads us to, we're very much not your typical seed fund that like slings checks and makes very experimental bets. So we run a fairly tight and very concentrated portfolio by design, which is, there's increasing number of funds who are following that strategy, but I think it is very differentiated strategy nonetheless. And I think it is very fundamental to who we are and how we try to invest and the pace of deals that we do. So
We'll give a shout out
sometimes
to
we invest.
Drew.
What's that?
We'll give a shout out to Drew Eldridge, that is also very thesis
There's
driven.
Look,
A few,
a lot of funds have sort of rethought fund math and increasingly are seeing, I think, the value in having a portfolio constructed in this way. But it is, this is very foundational to how Equal operates. And that's why it's hard to answer, like, are you seed or are you pre-seed? You would probably camp us with seed, but I think the right way to describe it is that we are looking for double-digit ownership, and we want to write a lead check, and we are, highly thesis driven, which is to say not just within those four verticals or across those four verticals, but like within them as well, right? So within our respective categories, we like to say, like, my mandate is not to get a bunch of deals done. It's to find one or two insurance bets that are uniquely aligned with the thesis that we've been articulating and a specific view of the world, aligned with the catalyst that we expect or the areas in which we think we're most positioned to support a company. And we're fairly focused on that sort of strategy. So sometimes that means a down the fairway like seed investment for a company that has like seed level traction, or sometimes even more. Sometimes that means a very, very early bet where we align on a vision and a strategy that we think is differentiated, and find a team that we think is uniquely positioned to execute on it, that we can align with. So we've made some inception stage bets. We've written seed checks that are more like seed checks. But I think the theme that is standard across them is that, like, we want to invest a first check of $2 to $3 million, and we want double-digit ownership, and we like to expand that ownership over time. So we do have an opportunity fund alongside Fund 2, which we're lucky to have, and that's important to our approach. We want a long-term partnership when we make a bet, and we don't really do very much that's like small or experimental. When we make a bet, it's really on account of a lot of conviction. That's what our process looks like here.
So I can ask about the thesis, or we can just go question by question of hit and miss. Are you doing only SaaS or doing also risk, MGAs, etc.?
No, definitely not only SaaS. I think we do have some technology platforms in the portfolio, but I think particularly in insurance, it's not always easy to position SaaS, right? Like really long sales cycles. There's not always openness to new technology. So we do have MGAs in the portfolio. We also have sort of more service-oriented platforms in the portfolio that don't position as SaaS. So even though like technology is foundational to what they do. So yeah, I sometimes I like to say, like, I like to find a really interesting insurance business that has a technology component. Definitely not the latter. I think the distinction isn't always obvious, right? But I'm not looking for like a tech company with like a veneer of insurance. We're trying to get into the weeds of an insurance business and strategy that we find highly compelling. And that does often look like an MGA because, we're very focused on what loss ratios and on, bending the risk curve, so to speak, right? That's a big theme that we think about when we look at a new underwriting company or MGA, and certainly a topic of discussion that we'll cover at the summit. And I think when your thesis is around finding opportunities to reduce loss that are structural and drive long-term advantages in terms of data or in terms of acquisition or in terms of carrier relationships that you drive from delivering better, P&L outcomes for your partners, I think, that can be manifested as an MGA. That's one way to do that.
Interesting.
We are definitely more excited about, to the extent we pursue those businesses, we're more excited about categories that are maybe a little nichier or have less like supply. So we've not done MGAs, for example, in some of the largest personal lines categories where I think
that at this point we passed that stage of
that's right.
Let's do another auto, or I don't know, something like that. It's been I think that in the past 3-4 years it's all about niche special risk,
finding pockets of specialty risk where you have a really unique either distribution and or better distribution and
that's my
loss
thesis
angle that is proprietary and that you can deliver and improve long term. I think for example, we have in our portfolio, we actually haven't quite announced it yet, but an MGA focused very much on niche verticals, and we find it immensely interesting because there's you instead of going after the $10 billion premium line that everyone is targeting, there's lots of categories with a couple dozen or a couple $100 million in premium where losses are really high, distribution is not good. Brokers are increasingly, underwhelmed with the product, and real operators and businesses or even people, need new product. So we find those lines really interesting. And it's a long answer to your question, do we do MGAs? But yes, we do.
I don't think it's a question answer here. It's more about the conversation. And when I look at the MGAs, especially at the beginning, it will take. They have their theory and thesis about how they're going to have the best, lowest loss ratio, which is critical for an MGA. But if they are early stage, the most important part that my first question for them is, do you have a distribution channel? Can you sell insurance? It doesn't matter if it's your insurance, someone else's insurance, just sell the insurance and then we can optimize on the risk. Ideally, you should already have some sort of a technology or a thesis that will make sure that your loss ratio will be there. And then we talk about, all the things behind it, from the capacity and the relationship with the different reciprocals, etc., and what's the right structure that they should have. That's, first of all, sell, because you are here to sell insurance. Once you have revenue, we can work with it. But
look, insurance is a sales business at the end of the day, right? So I don't disagree at all with what you're saying. I guess I would add, though, in some of these categories, like you mentioned, right, the nichier areas, I do think there's a ton of channels that you can explore to get that distribution, right? Because there's such a growing need for new product, either whether it's reflected in carriers disappearing or non-renewals or prices going up too much. I think there's a real scramble for new and better products and a better customer experience for distributors and for insureds. I think it is harder to replicate that on the side that you say we've moved on from. I think it's just more competitive. So I think we absolutely want to see distribution in a distribution advantage paired with a better product. But I think it's important to outline them together. I wouldn't, if I saw a distribution advantage with no sort of thought on an underwriting advantage, and it was hey, we'll deal with this later, that probably would be less interesting to me. But that's also a theoretical. No one presents their company that way. So
no, we are always to the.
Everyone has both, of course.
Everyone is to the right, and the quartile up to the right. It's everyone is like that. It's we are the best of the best, and even
that's right.
It's what State Farm. We are better. But again, I wish everyone to reach the position of State Farm or farmers, or find the right combination.
Those are all amazing companies, right? It's just
and they
we have
build it over 100 years
and secular issues going on in this industry. Some of them are dedicated, very insurance-y. Some of them are more macro. We have concerns about inflation. We have climate change. We have demographic issues. We have a lot of new types of litigation. I mean, there's a million different trends that are affecting the industry, and we can't expect, $100 billion companies to sort of lead the charge, especially in this industry where they are literally companies that exist for the purpose of managing and containing risks. There, I think there's tons of opportunities to support and enable those incumbents. And we look to those, amazing companies as partners often. And I think there's lots of collaboration opportunities, which again leads me back to the summit opportunity, which is why we want to build those relationships with folks at those companies. I think there used to be this perception of I'm sure people talk about this all the time with you, but there used to be this perception that InsurTechs are going to come in and disintermediate. I'm certainly not
No,
trying to
that was
disintermediate
the
Chubb.
beginning,
Like
right?
that's not
Yeah. No,
that's not on my roadmap. I think I want to find opportunities to catalyze innovation, which will, rise all the boats.
yeah, it's like no more agents. I think that we passed that. No more agents. Somewhere, second year into Lemonade's kind of.
Well, look, I fell for it. I'm not like smarter than everyone. After business school, when I was first entering this industry, I didn't know anything about insurance at all. Um, I spent time at Policy Genius. I built a product there, on the life insurance side at first. And, my team was sort of building out the platform capabilities there, which included, accelerating, and improving our call center and our sales processes, and a lot of operational overlap given the way that company operated, in the agency space. And I was certainly guilty of that, right? Like I remember suggesting like, hey, there's this huge friction point. We're requiring a phone call. Why are we doing that? Who needs an agent? We can just like automate this process. And mind you, like in certain, personal lines categories, things might eventually trend that way. But I actually really respect the company for sort of, not agreeing with that, right? And I think the view was that human advice is really important when you make this sort of transaction. And if that's true in personal lines, it's certainly true in the more complex commercial and professional lines where innovation is happening on the venture side more often today. So yeah, I think you're 100% right that like we're not trying to disintermediate agents. In fact, one of our biggest sort of longest standing themes in the insurance side is around enabling brokerage,
Yep.
right? How do we, if brokers are important, and if brokers also need to meet this moment of like changing consumer expectations, new product requirements, broader market access because of all the MGAs and the difficulty in ensuring not even niche categories, but just like massive parts of their book, new technology is going to be important. And therefore new platforms that deliver that and make it palatable and easy are, critical to empowering that demographic. So yeah, you're 100% right that we've moved on from that. And I think there's a million opportunities really to support that ecosystem instead of trying to like eat their cake.
Agent empowerment. I think that also, what's the name? Broker Tech are doing wonderful work.
Yes, they are.
Part of the effort, and I think this is now cohort 13 or 14 by Lloyd's Lab. They've been focusing on the Lloyd's broker, which is completely different than the brokers that most of us think about. Now, it's important, all this stuff, because these are the people who are using that. And part of the things that I'm dealing with nowadays, it's a roll-up. So those are all brokers. How do you bring them into the fold of bigger and better and greater? And you need the technology so it will actually make sense. And it's still sometimes hard to explain to people how that M&A should work with a little bit of, let's call it, dusk of technology and vision.
That's right.
It's a classic PE game, but you need a vision of a founder of VC. While, if you need the leverage buyout, it's private credit, which is the hottest thing nowadays. And they don't understand. It's like, I don't care about the vision. Where are the assets and will you pay me? It's like that.
Well, look, I can tell you, you're right that it is traditionally a PE game. And I think there are, ways to implement it that are still, probably more exclusively appropriate for PE. But, we put out some content last summer around, that actually specific opportunity, right? Like how we think about sort of aggregation and transactional velocity and scale on, the small agency side. And we find that opportunity really exciting. And I think there's a lot of approaches and components that actually make it actually very conducive to venture investors.
So who should reach out and how they should reach out? I know that you said, and it's going to be in the comments, the link of ICS or ISC.
Yeah, look, you don't even need to reach out for that, except if you have questions, I'm happy to answer them. But to learn more about the summit and to submit an application, it's ICS, as in Insurance Capital Summit, ics.equal.vc is our website. And from there,
And
you
it will
can
be a link in the LinkedIn post, and it will be also a link
absolutely.
in the YouTube, Spotify, etc., the different channels. It
That's
will
right.
all be there. Okay, so I'm going to do an experiment with you, and I'm going to ask you the same question that I'm asking all the people who come on the podcast and talk about that. Yes, of course. Because can you oh, there is one before. I didn't even ask you, who's your favorite portfolio company? Who's your favorite
I don't. We
portfolio
don't. I
company?
don't pick favorites. I think, as I
Okay.
said, we have a tight portfolio, right? We don't sling checks. We don't have a million portfolio companies. I can tell you very candidly, not plugging the book, I am immensely excited about our insurance portfolio. I think the themes that we've focused on across, across different parts of the value chain, I think we're seeing play out. And I think, we also, just do a lot of founder diligence and try to pull in teams that we think are uniquely suited to those opportunities. So no, I'm not falling for that trap. I don't pick favorites, but
And that's the right
I deeply
answer.
enjoy working with each of our insurance portfolio companies. And I can honestly say it's probably the highlight of, of this job is having those sort of relationships and opportunities to support those founders.
So first of all, that's the right answer. Now, you're actually, by setting up this summit, you look like, how can I call it, smart money, right? There are so many VCs who are talking about being smart money, or we provide extra value just beside the money. Most of the startups, especially the early ones, they go like, just give me the damn money so I can start work and develop my company and do something with it, so I will not be desperate. Okay, no, less about the desperate part. But with the summit and bringing the ecosystem together, you're actually proactive about to develop the ecosystem for your podcast.
That's right. And we talk about that, in each of our verticals. Not, the summit I think is a piece of it, but it's not just the summit. We want to have as much connectivity, right, across each of our sectors. And I think the bigger network we have, both in the more specific investment theses that we're drawing up and in, broader parts of the landscape, support that. So we're super eager to sort of build more and deeper relationships with lots of different stakeholders. And I think it's invaluable to us as investors. And my hope is that, it does open doors for our portfolio companies too.
Awesome, great. In that case, there is no follow-up question on that. You already partially answered that. So let me ask you my question of do you have a good failure turn success story? Should I prepare you in advance for that? Usually I tell people to think about something in advance. The thing is, and that's a problem, each one of us has a certain failure, a few of them on daily basis, but they're not camera ready or they're not good enough. And usually we need to feel that it's something substantial with like aha moment and some sort of a philosophical depth, especially and it needs to have a success story. Otherwise we feel uncomfortable talking about it. But
look, I can tell you I fail all the time and I try to turn it into a success. I guess you can see that I'm not actively like interviewing for jobs because I haven't brushed up on my sort of aha moments. The examples I have are very like project based and situational. I don't think they're particularly interesting for the pod. But yeah, like I think as operators and investors, we need to be set up to fail and recognize that we're failing all the time and turn course. And I think that's like fundamental to what we do. I'm not like always trying to be right the first time. I'm eager to consume new data points and change course.
That works.
It's a non-answer to your question.
No, it works. Having the ability to be flexible enough, that's a way to turn to turn a failure into a success, to be flexible enough to understand. For the biggest problem, and we can go by, the classic denial, I forgot all the other steps,
Right.
blame, etc., and then acknowledgement. And then you have finally like, okay, great. Now what? What am I doing with this, right? Being open-minded and flexible and sensitive. Oh, there was some sort of failure, and being flexible to learn from it That leads
That's
to
right.
success. And most of those successes don't come today. They will come later. And oh my
That's
God,
right.
I have so many of those that I'm gathering the notes on. Okay, wonderful. Adam, it was a pleasure chatting with
Yeah,
you
this was
about
fun.
it.
I want to say thank
Likewise.
you for setting this up. I really appreciate it. It was good chatting. It's good to have some more airtime with you, and I really appreciate you helping us get the word out about the summit. We're super excited about it, and I think it's gonna help a lot.